Alright guys, so we have all been in this situation. Bro, the market just took my stop loss with few pips and then went my direction. That's exactly what I analyzed. It really took my stop loss and went my direction. And it's painful, like it's painful. It's really painful, not sometimes. It's always painful for you to read the market play in direction, but first taking your money before going in your direction. And we feel like it's as if the market is chasing us or against us, or the market have a beef with us. Well, for me, if you ask me, I would say, yeah, the market actually is chasing you. The market is looking for your money. Well, yeah, I say that because the market I know is after two types of traders. It's either a trader with an impatient kind of trader or a trader who has the wrong information. So, guys, let's get into the lesson and let me get to show you guys how to avoid being it took my stop loss and went my direction. Show you guys the reason why that happens and show you guys the real way or the appropriate way to actually approach equal highs and equal lows when you find them in the market. Let's get started. Alright guys, so why did I say the market is always against us or against you? One thing I want you guys or I want us to understand is that the market is a zero sum in the sense that there's no money stocked in a place or in a particular bank account of your broker that they give you your profit from. No, the market is actually a battling field between traders. Understand? It's a battling field between traders in the sense that the money that they lose is the money that is being awarded to someone else if their trade goes to profit. Do you understand? The money that a trader loses is that same money that another trader profits. There is no money in anywhere that is being saved and then this is like account for traders or account for profitable traders, and no, it doesn't work that way. So since you have to lose for other traders to profit, that brings us to something called liquidity. So liquidity, I can't really recall the textbook definition, but liquidity is simply the stop loss of others. Okay, stop loss of other traders being taken so that those people on the right side can be paid. All right, that is liquidity. So the concept of the market being against you, I'm trying to explain, or others have to lose for you to profit, is what is called liquidity. So liquidity is taken from the market in different ways. All right, the liquidity is created or taken from the market in different ways. Since liquidity is stop loss, there are different ways in which our stop losses get triggered. But my attention is not on traders alone. My attention is on the market makers now. And the market makers actually know how the market plays better than us. The market makers know in collection how the retailers think and how the retailers are going to do their thing. So the things we learned about equal highs and equal lows, we actually play it literally as the retailers. Alright, we are retailers, so we play it as the retailers. The way we were taught, when to execute it, the confirmations we were taught to look at and all of that. These are the reasons why, or those are the things that put us at the wrong side. Those are the things that put us in the vibe of it took my stop loss before going to my direction. Though sometimes these things are not avoidable. Sometimes you cannot, like you all know, there's nothing that is 100% in the market. But work with me, let me show you guys how to do this thing. Let me explain, let me break down liquidity on the chart for you so that you can get to understand how to approach it when you meet it at liquidity at equals. Like I said, liquidity are of different types, okay? But we're going to talk about liquidity at equals since we're talking about equal highs and equal lows. Okay, people, so we're on the chart now. This is versus 75 index 1s. I'm going to use this as an example, but bear at the back of your mind that this works in all markets. Whether you're trading NAS 100, you're trading US 30, you're trading anything you are trading, what I teach to you guys is effective everywhere. Okay, so let's look at the examples one by one and then I'll write them back to show you guys how it should be properly traded. So I'm just going to show you guys the scenarios and how they occurred, and when we write back again, I'm going to show you guys how you should trade this thing. Like I said, the market makers knows how we do our thing, so they always give us confidences to our let me just say to our foolishness. That's how I used to say to my students, whenever you get foolish in the market gives you reason to be more foolish. So there are always confidences for all of our lack of information or our wrong information or the wrong ways in which we interpret messages from the market. So you can see here on the coin ends of the market, you can see that this was equal high kind of vibe, right? So we had this equal high there, and for those people that like to mark the equal highs, I think it's definitely going to be marked like so, right? And you can see that when price came to the rectangular box, you can see it will always give you reasons for entry. Price will price will always give you reasons for entry. So because the market makers know that people or the retail traders, most especially the beginners, and most trading systems don't cater liquidity because they know that you see they give you that reasons for entry. So, you're supposed to sell. This is a good ginormous bearish candle here. My lighter candles are the bearish ones, right? So this is a good and almost bearish candles, and then you see people executing when it closes and putting stop losses below, right below, or slightly above or slightly above and stuff like that. And you can see the market will go there, take your stop loss, and play significantly. The market always plays significantly after taking your stop loss. Why? Because the market makers now know that yeah, money have been collected, so let us get in. They know that's why you see whenever the market takes your stop loss, that is when the market moves better. That's when the market move very well because it has taken money from people who don't really understand liquidity. All right. So that's one example you can see there. You can see price is moving significantly to the downside. Let's look at this. This for the equal highs. Sorry, equal lows. The first one was the equal highs. So we have this right like so. You can see price will give you reasons. That's why price will always give you reasons for anything. This is one of the reasons why most people don't even listen to anybody when they tell them when you're trying to let some people you see someone do something not really nice, but they don't listen to you. Why? Because they have confidences to what they are doing. They know that yeah, what they are doing, is making sense to them. But a lot of the things that you come into the industry to learn as a newbie or when you are coming newly, most of the informations you have, they are wrong. Most of the informations are wrongly printed to you guys. It's just like almost everything in this world now, they are talking about conspiracy theory. It's also in the industry here. Too many conspiracy theories are here. You see a lot of things were taught, they don't really work. They are the things that have been holding you back. I'm sure now it is so obvious that support and resistance. My mentor Mark has spoken about it, and it is his speech is actually touching people, and they are not really paying attention to support and resistance anymore. But people still pay attention to support and resistance in systematic ways, you know. So like this, you can see it gives you confidence, give you another confidence. People can start executing trades here. You can see price has to come below before buying. So let's look at a few more examples, and I'm going to write those examples back to show you guys how you're supposed to actually trade these things if you find yourself or if you find the market approaching a previous swing point when you are trading. So let's look at this as well. I'm sure a lot of people have it like so, and then look at that. You can see here it was taken, and after it's taken, look at how significant it went. It is only when the market take your money that it plays well. I know that hurts, but it's because of liquidity, and I'm going to show you guys how to do it, how to join these moves instead of being liquidated. You can see when you executed earlier, you can see how it was not the momentum isn't strong because liquidity is not taking. Price cannot buy at the same level twice, like within a very short time. It can buy in a longer time, but not within just like this is the last swing. Price cannot come back. If this is the last swing and this was the last place the swing bought, price cannot come back with the next swing after it to buy at the same level or to sell at the same level. It can't work. It can't work. But we were taught that equal lows, equal highs, double top, double bottoms, you're supposed to buy, you're supposed to sell, right? But those are wrong. Those are wrong informations. Okay. So this is another one for the sell side, right? Which is the equal highs, right, for selling. So look, we're gonna have this like so, like that. You can see price have to come out. You can see price have to come out. This, like I said, anytime you execute, the market will give you reasons to stay in it. It will give you reason to be comfortable and confidences to be, to stay foolish. Sorry for my English now. So you can see here we have what candle pattern signal. We have a pregnancy candle here. So the short will be there, stop loss above. You can see the market have to come and take you. It takes your stop loss and then plays in your direction. So let's start from here, and I'm going to show you guys. Let's start from here. Let me show you guys uh, how are we supposed to approach this kind of market. Now, those of you that have been following me for a while, and those of you that are in my mentorship, you see that
I don't mark my swing point with whatever box. I mark it with a line. Why? Because I want to know the exact number. I want to know the exact point in which a swing point, the highest or the lowest uh, level of a swing point. I want to know that level because price have to take that level. Price cannot buy from that level or sell below that level because unless we're having a market shift, price cannot do anything below that level or above that level for buy or sell. So if I have the line like so, no matter what price comes to do here, I don't trigger because even if it comes in and drop, it can become a higher low and then breaks above and become an uptrend. Price can do like so. So I don't interact with it when it's at this level. I only interact with price when price comes to sweep it. All right. Sweeping it is when price came above it slightly and came down below to close it. Sometimes sweeping a particular level is done by one candle. Sometimes it have to be a combination of candles for you to confirm the sweep is valid. Now for this scenario here, if we are looking at only the sweep level, I told you guys there are two ways to look at this. There are two ways to trade um, properly when you are approaching when your price is approaching a previous swing point. So let's look at the first way now. The first way is when price sweeps. So there are two ways to confirm. Sometimes when price sweeps, it's just with a candle, and sometimes when price sweeps, it is with series of candle to give us a candlestick, a valid candlestick pattern, which is actually preaching the sweep. Now look at this level, this particular stuff, this particular area here. This candle sweep is not any. This candle is not among the candle patterns. This particular candle is not telling us any information. It is still a bullish candle, so I can't sell blindly from this candle. This candle too, I can't because it is just like a hanging man and hanging at a very wrong time. All right, I can't sell here. Now, if I combine 1, 2, and 3, this is what is called evening star. When you have a bullish candle, a bearish candle, and then another bearish candle, that's evening star, right? Meaning, and when you have evening star at the peak or at the previous swing point, like a previous high, you should know that it is time for selling. It's time for short. So with a combination of 1, 2, 3, I can sell I can sell immediately after this candle closes here. Like after this third candle, which tells me that it's an evening star. An evening star happening at the top of a trend is a reversal signal. I can sell here like so and put my stop right above it. Right above it. Now, putting the stop right above it, you can see here was so close, but it didn't take it. It didn't take it. Why? Because aside liquidity triggering your stop loss, there are mind games the market makers will play with you. Mind games. When you see market coming like so in deep negative, a lot of people run out of the trade. Those are mind games. All right. So when I have my entry there, you know where the stop loss is supposed to be. The first one will be, the midpoint of the M, and then the last one will be at the originating impulse. Okay. Now, what is the second way to look at this? The second way to look at this is pattern wise, looking at it like the way Falcon they look at it in the Falcon community. If you are conversant with the Falcon trading system, you know that anytime price is approaching the high, Mark doesn't or he told us not to look at the price based on just one candle rejection or based on just selling here blindly, just like I'm saying. Alright, he told us to look at it pattern wise. Alright, now pattern wise, you can see that the last, like I always tell people to look at the last impulse and the last swing point, the last correction, right? Now, if you look at the last impulse approaching this particular swing here, we have this push to the upside, right? We have this slight drop here, then we have this, right? And then we have this, and we have this. Then now we have this. Now if you look at this, even without connecting the trend line, if you look at this, you can see that it's an expanding structure. You can see it's an expanding structure. And whenever you have an expanding structure, the current place the market have expanded to, it's more likely for you to drop from there. The more if you have an expanding structure, put this down. Remember this. The more the structure expands, the more it loses momentum to that direction. So this was where we were, and then you see price came here. Number one confidence that it swept this level by closing below, Number two confluence is that it is what? Expanding structure and giving us what? Evening star candle. So bro, this is a good signal for you to sell. This is a good time for you to enter. Not entering here blindly or entering at any of this rejection even before price communicates with your last significant swing point. So price have to communicate with your last significant swing point and then give us, you look at it pattern wise or you look at it based on aggressiveness, like just the candle pattern, the last candle patterns that approach your swing point. These are the two ways to look at it. It's very simple. If you look at it like this, you will not have that vibe of you took me out before and played in my direction. Because anybody that sold here, it definitely will do that to you. But if you sell here, your stop will be tighter, your target will be much more, and then your trade will run very well because you will trade alongside the market makers, because the market makers, they are the ones that sponsor these moves, so that those people here can be liquidated, their money can be taken, their stop loss can be taken, they can pay themselves. All right. So let's look at how we would have traded the other ends. Let's look at how we would have traded the other ends. I can't even remember where exactly I got the example. So it's easy, guys. It's easy. If you know, you know. If you don't, you have to learn. All right. Because one thing is, if you don't, no matter how much no matter how old you have been in this industry, if you still don't have the right information, you are going to keep suffering. That is the truth about this. That's how it is in this industry. If you don't know what you're supposed to know, if you don't unlearn the wrong things and learn the right ones, you are still going to keep blowing accounts, keep getting emotional. You're still going to keep feeling like it's not meant for you, but it is meant for everybody who is ready. Alright, so this level, how would I have traded? The same thing, just come and draw your real line there, right? And then you wait. No matter what price do inside the real line or above the real line, since you're looking to buy, do not communicate with it. But as soon as price came below, you see this guy? You see this guy? I just remember something from TikTok. Number one bullshit guy. So you see this guy? When price came below, right? Price came below and closed above it, meaning what we have gotten that sweep, because this is a bearish candle, so this is a good one. So meaning price opened here, came up and went down to close here. This is a good bearish candle. So if I want to go aggressive, I go with the next candle immediately, which is I would have bought here. My stop loss will be above. You can see whenever the market makers have taken the money, stop losses is rare to be triggered. No matter how aggressive you go in the trade, it's rare to be triggered. But I remember, nothing is 100%. So there are times the sweeps happen more than once. So it will sweep you. It will sweep first. You enter. It will sweep again. Right? Times are like that because things are advancing. They are discovering that people are discovering the system, and they have to also put more effort to liquidating people so the market can go on. So, and if you want to look at it pattern wise, like I said, look at the last impulse that approached the market, the swing point. This is the last impulse right here. This was the swing point created, and then we have this swing point, and then we have this second swing. And trend line can be connected in two or more swings, right? So we have 1, 2, right? And then from that body there, we have this 1 and 2. So this is kind of like expanding as well. It was expanding to the downside and then swept this guy. So we have what? A good buy call here. We have our stop loss above the distance, the sweep candle. You can see it came very close, but it didn't. Why? Because it needed to play the mind game for those people who are to run out at the last one. And you see, anytime the market sweeps, you can see how significant it goes. So that's how it is, guys. It's very easy if you put your time, practice it very well. Try to, look at it on your chart, practice it over and over, get used to it before using it on a live account. So this here too is the same approach, like so. You have it and you wait. Whatever price is in above, don't, because normally you're supposed to have the real rectangle here and then looking to buy here, but don't. So price came below. You can see this one. The sweep isn't just with one candle. The sweep with combination of candle patterns that help to show the sweep. First of all, we had this sweep. Like I said, if you go too aggressive, sometimes it will take you. So we have this sweep here. We have a doji here. It went significantly below, but it came back to close above with the doji. The next candle was a bearish one. Doji and bearish candle, I don't think they make any candle pattern though. So from there, it came back again and then gave us this. Now, where the sweep was confirmed is when we have these ginormous guys pulling inside back into the into the the direction, right? So with this, I cannot really execute with a candle pattern here. What I would have done, sorry, if the candle pattern, what I would have done is waiting for the chart patterns to get right. Okay, so we have this 1 and 2, and then we have 1 and 2, like so. So we have this impulse in running channel. When you have a running channel, what I say to you guys is a reversal pattern. So if I see a running channel, when we have an impulse to the downside or an impulse to a particular direction, and then you see swing points to that same direction, it's a reversal pattern. So it is a nice call for a sell, and sorry, for a buy. And those of you in the community, or those of you that are in my mentorship, you know very well that this pullback was a good sniper entry criteria for us. All right. So let's finally look at the current end, which is the last one, and then we can say bye bye. Remember to always practice. The more you practice, the more it gets used to you. Right? So for this, we're to have like so as well. We have this, right? Waiting patiently to see what price will do to it. Price gave us this first sweep, but look at this. We have the first sweep, okay? Unless you go aggressive, you would have been safe. If you went aggressive, you'd have lost whatever percent of account you usually risk. But this side would have been 1 and 2. There's nothing yet to connect yet, so it won't actually make sense even to you, unless you want to force this. And if you put it like so, there's no breakout yet. So this is it a pennant? This is ascending something, ascending triangle or something. So normally there are indecisions when you have this pattern. Look at your your chart patterns as well, so you can get conversant with these things. So when you have this kind of patterns, indecision, it can break above or below. So you have to wait for it to break below first before you can execute. So I would have been safe there. And then when this happened and came significantly below, then I would have connected 1, 2, like so. I would have connected this like so, 1, 2, and then like so. So this is the impulse. I always tell you guys about impulsive correction. So this is the impulsive correction, the downside. We have these price swings to the upside, so we have to anticipate what continuation to the downside, because we have to continue toward the direction of our impulse. So guys, this is how you should properly approach equal highs and equal lows. This is how you should enter your trade. This is how you should look at entering M's and W's when you're looking to trade equal highs and equal lows. Thanks for watching, and stay high.